Hello guys, welcome to the Trading Parrot. Today is the FOMC meeting. In 9 hours we are expected to know whether there's going to be any change in the interest rates. There's an expectation of 99.5% of a no change. In today's video we're going to cover everything that we need to know in preparation for the meeting. Most of the information I'm going to share in the video comes from price action, indicators and data coming straight from the order book, but we are also going to give a very quick tiny overview of what's the sentiment out there in regards to the FOMC meeting, investors and traders. There is currently a 4-hour breakout, so we need to cover that 4-hour. We took a hit on the daily, including a MACD bearish cross. I'll cover that as well. The CME gap hasn't been fully filled, neither the upper liquidity that is still on the table. So we need to look at that with an eye on trying to spot if it has increased, since that can also bring back some motivation to push the price still higher from where we are, invalidating any potential bearish patterns that we are currently seeing. At the end of the video, I'm going to cover as well the monthly chart for Bitcoin and the dominance. Many of you guys are always reminding me to not leave behind the dominance since you care about your positions on the altcoins. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And in yesterday's videos about Bitcoin testing the breakout, we got only 500 likes. I'm still aiming for 1,000, and I believe this has nothing to do with the actual content in the video. I think retail has been kind of throwing the towel with the price action, and that for me is quite bullish by itself. Every time I get lower views in a video and we are long, we tend to do really great, and retail comes after when we are already talking about taking profits. They feel disappointed, but well, trading, that is the whole point of having a market. That's the way markets work. If you want to stay out of that game, do the opposite. When I'm long and you see a video with 6,000 views, think that it might take a little bit longer to get there. When you get just 2,000 views on a video talking about a breakout, it means that no one is buying that narrative because they are burnt out, already disappointed, adding to their shorts or whatever. And that is where the setup might actually have the best chances to succeed. Of course, nothing is guaranteed, but that calls my attention, and I believe it should do the same with you. Let's look at the Google Trends. We are at 34. Recently, we were at 32. We had a spike of interest of 43, which coincided with the new administration in US. Right after that, interest went back to the floor. And if you want to become a great trader, I think this data point, looking at Google Trends and seeing a lack of interest, it's always something that should call your attention. Why so many people left? Did they take a loss? Did they take a hit? Are they disappointed? And all those feelings, when they become wide across all social networks, interest in Bitcoin and stuff like that, it is actually bullish, whether you like it or not. So let's go straight into the lions. This is the 4-hour time frame. Definitely I'm paying attention to this. If you're watching my night update and my good morning one as well, you know that since yesterday in the morning, we are maybe 2-3 days ago, I'm expecting to see on the 4-hour a bounce back up, and my expectations were to see some sort of breakout eventually. In terms of timing, it happened on Tuesday, but it couldn't hold. It ended up closing at resistance. Bear in mind that this line, thanks to this move up and back down, forces me to move the line in here to match the new pivot. I'm gonna ignore this pivot, and what we now need to do is this new breakout, confirmed at 5 a.m. this morning UK time, needs to ideally hold that 47 support. Price action is just going sideways simultaneously, and it hasn't broken out the 102.8 that is defined by the resistance that we couldn't pass yesterday. So last night we were coming back down to 100k, and in my video in Paul Baron, this one in here, the one at the top, got loads of negative comments saying this didn't age well, and people that are watching the video is a huge combination of investors, people that want to hold, which I really respect, but there is a clash there because my approach to trading is completely different. I am not aiming to hold for the long term. Coins like XRP, I'm trying to look for opportunities for a swing, a daily trade, and that's where they get overwhelmed and they start criticizing the approach. But if you've been in the channel for at least more than a month and you are in that stage where you're starting to understand where we are coming from, you can understand why this moves down, defining a pattern, is nothing but noise in terms of whether we need to react. To me, it's just part of what the price action does all the time, and I just stick to my method. When we see that we hit resistance and come back down, I remain cool and I just think we might do it in a little bit more time, allow time for the price action to fully develop. And you can tell when we were here at 42, if I close my position, now I will feel like the most idiot with my swing long because now we are back in the breakout area and price action is designed to shake you out. And if I took the advice from the people in that video saying this didn't age well and I close my position, now I will be, gosh, what am I doing? Why am I closing the position? That doesn't make any sense. Anyways, I think the 4 hour has chances. How big are the chances? Well, we have the 4 hour, there is an ongoing battle, and in that battle, whichever outcome we get, I have a plan. And that's the beauty of having a method. We have an A and a B, and we could do a C into 96K. What is the plan? At that point, we are going to assess whether it corresponds to add more volume to our trade, or if we think that there is enough weakness that we are gonna say, nope, I'm not gonna add here. We are going into a lower low and we're going to 88. We are indeed going to target that liquidity there. So that could become my next addition into my position instead of the 96, which seems to be very light in terms of liquidity. If we break out in here, areas I'm gonna be looking for is the 105K, because at that point we complete filling the CME gap. At the same time, at around 105, a little bit higher, 106 more or less, we will have taken already liquidity from here and there, and we will have complete as well the fair value gaps. So that makes it a conservative target. And as soon as we get to 105, we need to put the big question mark, which is, are we just going there for the CME gap, for the fair value gap, and for that mild liquidity? Or are we going to continue into 107 and get the first red that we have in the shorter term? It's actually the first and the last. There's nothing above it. If we want to continue beyond the 107, we need to get over to 112 to get the longer term in the red liquidity. And remember that on Saturday, my video, plan A was to go straight to that. Plan B was to break down, do a V recovery, and still do it. So we are in plan B. There's an underlying plan C, which is rejection strong in here, and still we go to 96. Which we already cover, and we said we need to leave some cash aside in case we need to break the glass and use the fire extinguisher in here and still exit elegantly, okay? Without wrecking the account, obviously. On the daily, yesterday we were saying careful because we can go to the fair value gap and that could be resistance on the daily. It was a little bit higher than the resistance on the 4 hour, and we did precisely that. We went into the core of the fair value gap and saw our rejection to 100K. As a consequence of the price action yesterday, we pinched the support on the daily. How bad is that? It is a little bit bad. It is not yet the end of the world. And I'm going to explain why. Because it all depends on how we come out of the FOMC meeting. If people like what they hear, there is a chance that this green candle ends up taking us back at the top of the range at 104K. At the moment, the expectations are 99.5% that there is no change, and there is a very small 0.5 that there could be an ease. The analysis at the moment, which is not something I'm gonna trade, but we want some awareness of what is the train of thoughts across the board in the markets at the moment, because most people are just gonna consume this information and they're gonna make their emotional decisions based on this. So it's good to know how can we take advantage of that in a way, right? The economy is holding steady. There is a narrative that the Fed wants to keep the interests at the same level to make sure that they are on target to reduce that inflation. There is an expectations of 2 cuts, but those 2 cuts are very small in this year. I will say that all of this is already common knowledge across all markets, and most likely they are already priced in. The only uncertainty that could spike some volatility today is that this is the second administration of Trump, and that he's got his own agenda and is not necessarily supportive of what Powell is planning to do. There is an idea that he might push back or even make the Fed invalid at some point. Trump threatened the independence of the Fed on the campaign trail, and Powell has maintained that it is vital that the central bank remain free from presidential control. So there is an ongoing arm wrestling there of egos, and that could be a source of uncertainty today, whether Powell has got some internal information there instructing him to do something different and introduce a cut rate. And I think that is what is at the moment this 0.5% there of a potential ease. There is all the people at the moment thinking if there is an effective ease at the moment, whether this is forced by Trump's new administration, that could repeat those fears in the past where we had market crashes, huge general markets, at the point that they cut the rates. And all I want to say about that is that it is not cutting the rates what crashes the markets. The thing that does it is usually something else that breaks in the market, which causes the Fed to be forced to cut rates. So when you go back in time and you look into those charts that people are showing you with massive crashes in the market, big bubbles and all of that, and they try to convince you that the final rate cut caused the crash, I don't think that is the cause, but kind of the cure that they want to introduce as soon as possible to prevent that damage escalates. So you should be asking yourself, is there anything at the moment broken? Think about labor, housing, or anything really important. Anyways, going back into the price action, I continue at the moment to be bullish. It feels to me like the price action really wants to go for that liquidity. But if we go lower and we end up in a scenario that is less likely playing out at the moment based on the data, we're going to adapt the plan. On the weekly time frame, there is literally no update. We are in the same place as yesterday. I think that is a consequence of traders and investors waiting for that decision. On the daily, we had another MACD bearish cross. Unfortunately, yesterday we confirmed it on Tuesday. It's been 5 bearish crosses since November until now. It's pretty annoying. We'll see if it plays out. Notice, for example, in October, we have also bearish crosses like this, and then another one in November, and we still rally. So although I agree that this doesn't look great, neither it did in October, and eventually we still had a rally. February tends to be a green month in general, and if we look at 2021, we have a 36.78%, 2017 we have a 23%, even surrounded by red months before and after, but February, as you can see, tends to be really great. In 2020 we get a red, that is the most recent February in red, but that was in COVID, and we continue with 24.9% down in March. On the monthly, we got an engulfing green candle. I insist that it will be ideal that in the upcoming days we close above 108 to completely push back on all the bears thinking about this shooting star that invalidates it. And the same goes on the weekly. Ideally, let's close this week above this resistance of 104.4, which I keep saying in every single video, so we can push back on the idea of the M pattern on the weekly. Right where we are in the price, the K line is above the D line on the stochastic RSI, which implies that if we were to close the weekly candle today in this price, we will have a bull cross on the stochastic RSI. The RSI itself is against resistance, and it's a very, very tough resistance. It's been 2 weeks that is holding us, But at the same time, the price with this price action in here looks like it really is insisting. I do want to break out that level and go for the higher targets, possibly run into resistance at an RSI weekly of even closer to 80. And that will take the price, if it succeeds, very close to 120. And that will take the lowest hanging fruit on the longer term of liquidity. On the monthly, in a couple of days, we complete those 90 days of RSI being above 70. Some people are saying we shouldn't count those 3 months from the moment that we cross above 70. We should actually wait until we see an impulsive move beyond 70. Like for example in here, that we didn't actually count this spike there, we actually count the second time we cross above 70, and that gave us the 337. So if that is the case, all of this is just a teaser, and maybe from this new spike in here, if we count that, that will give us January above 70, February above 70, and March above 70, coming back below 70 in April. That's an interesting idea, mimicking what we did in the 2017 move in here. It could be, and that could allow still to have that rally into 79 monthly RSI, getting to the 117K when translated to price at the moment. Let's go a little bit deeper into the rabbit hole. Let's see what retail is currently doing. You can see that retail is positioned very fractional, very small at the moment. They're still in the area where typically price bottoms from the point of view of retail. But retail this cycle has had a very small impact. But regardless of that, we have to appreciate that retail is all gone in here. They were gone in the middle of the megaphone pattern. They were gone at around 42K, and now they are still in the very low levels of holding Bitcoin positions between 0 and 10K. Another indicator that is doing something interesting, we are exiting the orange once again, which means that this ratio between market cap of USDT versus BTC price is now back into the green. And usually the most conservative signal from this is doing precisely that. This means that people are entering in a position, and in here they went into an extreme of being allocated in stable coins. Open interest is also about to pinch the orange low, which means there has been a local reset of open interest, and that is typically the beginning of the signal. The actual signal is when you finish your journey down below the orange and you start coming back up. At that point is where it coincides the most with those local tops. Remember that these indicators on CryptoQuant that I have collected from other authors are all to do with spotting tops and bottoms, at least local ones. And accumulation from large holders continue in the 0.30. That is very strong accumulation from large holders. We are in grid at 72. Yesterday on the move into resistance, we liquidated a bunch of shorts and we started the day liquidating longs. There is a very impressive 15 million liquidation of a long at 101. Nothing really extreme in the order book for today. The funding rates are in the positive. Longs are at 53. The buying opportunity of 98 where I add into my position was the confluence of all this bidding with the negative funding rates, and that marked a bottom, so it was a good call to ride it up until here. What we are still open is for either option, whether we do the breakout or whether this triangle continues the way down to 96, so we then need to assess when and how much volume we are going to add if that comes out. Positions on Binance at the moment, we still have the selling wall at 110K. It's 130 million. And in a way, we could say that the purple whales are starting to buy in here. But to be fully honest, this just looks like sideways. The brown whales, which are the larger ones, have been reducing their position. I think they're all still waiting to see before they decide an actual move. Nothing substantial yet. And looking at the order book in here, we can see some resistance, some orders apply at 103.7. They want to short that level that is placed right there when we have that rejection earlier. And I think they want to play the game of shorting now this resistance in here. You can tell that 1, 2, 3, 4, 5 times it has rejected, but by placing those orders there without the awareness of what's going on in here is a very dangerous game in my opinion. The orders at 91 are still there. We have some new orders coming in at 97 on the speculation that we get that lower low there. That is just 470 in terms of amounts, whereas below we have a good cushion at 91 at the moment. Even going lower, you now have the 78, but actually that is quite old. This started from 9th of January. They move it from 73 and it's just there waiting 78. So someone is fishing for a potential big capitulation in here. And I guess this comes from all the uncertainty from general markets, the VIX this week spiking, the fears on a potential bubble, which I actually think it is possible at some point in 2025. I wouldn't discard it at all. Looking at what the Federal Reserve did, this is the last thing for today. We have this double bottom formation when it comes to their balance sheet, and then we pinch in here 3.34 trillion. I am looking for a move in this way. That is my hope, not my forecast, but with this double bottom formation, we have just increased slightly the chances that we could be doing that. The last reading was just a very, very insignificant move down, and that's how we are currently approaching the FOMC meeting. Remember that what they are actually doing, in my opinion, I keep saying that I care more than what they say during the meetings. If they're dovish, hawkish, I tend to think of that information just as manipulation that they use with the general public, whereas their approach to the balance sheet is the actual source of truth, if there is such a thing, assuming that this data is fair. We had kind of a similar thing going on with the global M2, which did a breakout in here, and that means further liquidity to all the markets. We also have kind of a bottom information that we have compared with multiple instances in the past, including this one that faked out and continued dragging down. What we do want from here is continuation and more liquidity so you can get your stupid altcoin season, and myself as well. And obviously we don't want to fake out like that. We get a double bottom formation and then we do a C wave down, and this is the actual bottom. We have a very small reduction in here into February. Luckily it's not a full rejection with a new lower low. I promised I was gonna look into Bitcoin dominance. I almost forgot. I'm gonna do that just in a second. But before that, let's look at others versus BTC because it's connected with that. And to me, this chart is very important. When we do the ratio of others versus BTC on a monthly basis, we can see this trend line that is constantly the best time to buy alts. We recently were there in November and we have this microscopic altcoin season. You can see it in here. We pretty much stay in altcoin season from 1st of December and it ended on 9th of December, just less than a week, and it got everybody super annoyed, mostly because people enter right there and then they are being crushed at the moment. Raise your hand in the comments if you're one of those. I've been waiting for the retest in here and at the moment is below the line. But this tiny guy there, this monthly candle in January, is getting very close to that sweet support. And there is definitely, in my opinion, that is a very interesting point of interest to enter in the altcoins. Think about being here, being here, being here, relative to waiting for that confirmation where you can get wrecked. If you start investing during these days, let's say early December, at the moment, everything is underperforming again Bitcoin. Looking at others against USD, I also see some bullishness in the area where we are. Notice that in March 2024, we created this bullish structure and we broke out in September 2024. That's where we had this big move. This definitely attracted a lot of retail for a lapse of a time. 9th of December, it ended. We enter again a structure like this. And this is when it matters the most that you have a trader mindset when there is so little liquidity in the market. Instead of thinking, oh, finally it's moving, buy it. That is retail thinking. If you don't see liquidity in the market, you need to have a more protective stance in the market and look for opportunities in bullish patterns for reaccumulation. And even if you enter here and you didn't get it right and you run this way and then you're underwater, you are in a lower risk area for a re-entry. This area and this area is definitely better than entering anywhere in here, because here they just enter and they never exit. In here you are in a reaccumulation area that can have another impulsive move into 500 billion from others. You can definitely argue that this could break down like this, but in order for this to break down to 200 billion, you do need the general markets to have a black swan event like. If you don't get it, if this is just the typical fear that we get every 2 or 3 days, then you're just bouncing at support, and this line can span a little bit longer. So maybe you enter in here, you rally into resistance, you come back here, and as long as you keep holding that, there are still chances that eventually when the conditions are ready, you break out like that. Anyways, it's always a risky game by itself being in crypto. You should know that. Let's go into Bitcoin dominance. So Bitcoin dominance is giving us a hard time in here going into the altcoin season. It tested the resistance once, it put a higher low and went back for 60 almost percent. It tested 59.69. I think that's the highest. This is a bearish pattern and is supposed to come back in this direction. And I think eventually we are going to see that in 2025. For the time being, we could be hovering in this area or going sideways or even put a higher high. I guess that will come with some pain additional in the market. I just see 2025 as an opportunity, and most of my attention is now in the sources of liquidity together with taking opportunities that are short term, swing trades, trading volatility, not investing. At these elevated levels of Bitcoin dominance, together with the USDT dominance being very high in this range, call it above 4%, are the areas where I look for swing longs, because that is where it gets overextended, the Bitcoin dominance. At the moment, we are at 4%, so we are closer to support. So when it comes to Bitcoin dominance, in a nutshell, what matters to me is what's going on in this chart at the moment, getting into that support. I think that is at the very least getting very close to an opportunity to enter on swing longs on altcoins. This can still have a little bit of downside, sure, but we are very close to monthly support, and we are in a bull market, and we are having early signs of additional liquidity coming into the market. So when you get that additional downside, I'm not necessarily getting disappointed. It's part of the plan, and the plan is to buy support, not to buy the rip, assuming that the rip is just gonna get to the roof automatically without liquidity. Guys, if you want to trade Bitcoin, altcoins with top-notch exchanges, my preference is 2 exchanges, and actually I have accounts on both because I really like the combination of altcoins that I get with them, not just on spot but also with leverage trading. If you open an account using the links in the description on OKX or Bybit, you can claim up to 60,000 in rewards based on trading volume. On Bybit, that goes up to 30,000, and using those links guarantee the lowest fees to trade as well. If you don't want to do KYC, which I understand it is a hassle, you can have a look at my non-KYC links in the description, starting with Bluffing and 2bit. Either of them are giving very impressive rewards for using the links in the description, including a Rolex, a MacBook Pro, an iPhone, or a Nintendo Switch. On Tubit, those bonuses go up to 30,000 bonuses. That is based on deposit and trading volume as well. I am going to do everything I can to be live during the FOMC meeting. I do need to get a few things sorted to be able to do so, not necessarily an easy one. So I would really appreciate, guys, if we can get this video as close as possible to 1,000 likes. That is definitely gonna give me motivation to go live and to stay with you there, commenting on all the price action live and taking your requests to do TA on different altcoins as well. Thanks so much for watching. I'll see you on the next one. Bye bye.